Howdy, Jacob here. Today we're looking at Donnelley Financial Solutions in the capital markets industry. 1.9 billion market cap on 2 billion enterprise value. Founded in 1983, they provide innovative software and technology-enabled financial regulatory and compliance solutions globally. Their growth has been actually negative over the last 10 years, but their gross margin and operating margin have improved. Earnings per share as well. Return on invested capital looks fantastic. No surprise for a capital markets industry. 803 million in revenue, um, good production of earnings. The share count is actually down a bit. It went up for a little bit, but the last 3 years they've been buying back shares like crazy. Balance sheet has 23 million cash on hand with no short-term debt and 125 million long-term debt. So that 125 million long-term debt is about 1 year of their free cash flow. So we're not concerned about that. Even if we were being conservative, it's 2 years. So that's not a ratio I'd be concerned with. As long as they increase their free cash flow, that's not something I'd be concerned with. Their use of cash recently has been debt pay down and share repurchases, with a little bit of money going to reinvestments and acquisitions. Simple as that. I think I'm ready to make some assumptions. Revenue growth, it's been going down. And although they have a high return on invested capital, this type of industry really doesn't have capability of getting that return unless they get extra funds into their portfolios. And so, if the market's a little slow and lagging, there might be a slowing of demand. And with how great the market's done from 2014 to 2020, I'd be surprised that they'd be able to sustain a lot of growth. So I'm going to be pretty conservative here. It might not be liked by you guys, but that's just how I'm feeling. I'll go pretty close to average here with the margins. Share change 1% is 19 million. To offset stock-based compensation about 40 million. And I think they can definitely do 1%. It's not looking pretty for me here. So this would be a company I'd be avoiding until it got to an extraordinarily much lower price, which doesn't, 83% drop is humongous. So could happen, but for me, there's too many other companies that are better deals right now. Why would I waste time on something that doesn't look at all like a deal? No thanks. Hope you enjoy the video. Have a great rest of your day.